Gold has long been seen as a safe haven during uncertain times. But with changing markets and new investment options, is it still a smart choice in 2025? In this video, we'll break down the current role of gold in your portfolio, explore its risks and benefits, and help you decide if investing in gold makes sense for your financial goals today. Today we will talk about, is gold still a good investment in 2025? So before we start, make sure to hit the like button and subscribe to my channel. 1. Gold's enduring legacy as a safe haven. Gold has served as a trusted store of value for millennia, maintaining its allure as a hedge against economic turmoil. In 2025, despite rapid financial innovation, gold continues to offer security amid global uncertainties. Unlike fiat currencies, gold's intrinsic value is not subject to government policies or inflationary pressures. The pandemic and ensuing economic volatility have rekindled interest in gold as investors seek to preserve wealth in uncertain times. Geopolitical tensions, trade disputes, and uneven global growth contribute to sustained demand for gold. However, the evolving landscape of digital assets and alternative investments forces a fresh examination of gold's role. As markets grow increasingly complex, gold's traditional stability offers reassurance, making it a critical component of diversified portfolios. 2. Inflation hedge in an era of monetary expansion. Inflation remains a central driver behind gold's investment appeal. When central banks expand money supply, as seen post-2020, inflation risk rises and erodes purchasing power. Gold historically appreciates during inflationary cycles because it cannot be devalued like paper currency. In 2025, persistent concerns about inflation, driven by supply chain disruptions, rising commodity prices, and expansive fiscal policies, encourage investors to seek protection through gold. Though rising interest rates often pressure gold prices due to opportunity cost, the current environment's complex inflation dynamics preserve gold's attractiveness. For investors worried about diminishing returns on bonds and cash, gold offers a tangible, inflation-resistant asset that helps stabilize real wealth. 3. Competition from digital assets and emerging technologies. The rise of cryptocurrencies and green technologies presents new investment frontiers that challenge gold's prominence. Bitcoin, often dubbed digital gold, attracts investors seeking decentralized, borderless assets with high growth potential. Though more volatile and speculative, crypto appeals to younger demographics and tech-savvy investors. Meanwhile, metals like lithium and cobalt are vital to renewable energy and electric vehicle production, opening fresh avenues for resource investments. Despite these trends, gold's durability, liquidity, and universal acceptance preserve its foundational status. In 2025, the financial ecosystem reflects a coexistence of traditional safe havens and disruptive innovations, with gold continuing to anchor risk-averse portfolios amid evolving preferences. 4. Geopolitical uncertainty and safe haven demand. Geopolitical instability in 2025 reinforces gold's role as a refuge in times of crisis. Conflicts, sanctions, and diplomatic tensions unsettle markets, driving capital toward secure assets. Recent regional conflicts and rising protectionism have heightened risk aversion globally. Gold prices typically rise amid such turmoil, reflecting investor flight from volatility and currency risks. Central banks also bolster gold reserves to diversify away from major currencies, signaling confidence in gold's stability. However, gold markets can experience short-term volatility due to speculation and liquidity shifts. Investors must remain mindful of broader macroeconomic trends when interpreting gold price movements. Overall, geopolitical risks underpin sustained demand for gold as a safe haven asset. 5. Portfolio diversification and risk mitigation. Gold's low correlation with equities and bonds makes it a valuable tool for diversification. When stock markets falter, gold often moves independently or inversely, helping reduce portfolio volatility. In 2025, with markets exhibiting heightened unpredictability from inflation, interest rate shifts, and geopolitical events, gold's role as a portfolio stabilizer is especially important. Financial advisors typically recommend allocating around 5 to 10% of investment portfolios to gold to balance risk and reward effectively. Investment options range from physical bullion and coins to gold ETFs and mining stocks, catering to diverse investor needs. Still, considerations like storage costs, liquidity, and taxation should be factored into decisions. Through prudent allocation, gold enhances portfolio resilience against uncertain financial environments. 6. Supply and demand dynamics affecting gold prices. The balance of gold supply and demand influences its price trends in 2025. Mining production remains steady but faces challenges such as depleting ore quality, increased extraction costs, and stricter environmental standards. Secondary supply from recycling and sales by central banks also affects availability. On the demand side, jewelry consumption remains significant, especially in Asia, driven by cultural importance. Industrial uses in electronics persist, though modest. Investment demand fluctuates with market sentiment and monetary policy shifts. Growing environmental concerns may impact mining activities and costs. These supply-demand factors create a complex pricing environment, requiring investors to monitor global trends carefully. 7. Risks and limitations of investing in gold. Despite its benefits, gold investment carries certain risks. Unlike stocks or bonds, gold generates no income, such as dividends or interest, making it less attractive during economic expansions or rising interest rates. Price volatility caused by speculative trading, geopolitical shocks, or monetary policy shifts can lead to rapid price changes. Physical gold entails storage, insurance, and authenticity verification costs, potentially eroding returns. Regulatory shifts, including evolving rules around digital gold or cryptocurrencies, may impact market dynamics. Additionally, counterfeit risks persist in physical markets. Thus, investors must weigh these challenges against gold's advantages and carefully consider how gold fits into their overall financial goals and risk tolerance. 8. The future outlook for gold investment in 2025 and beyond. Looking forward, gold's investment outlook is shaped by ongoing economic, technological, and geopolitical developments. Inflationary pressures, currency uncertainties, and global tensions support continued demand for gold as a safe haven. However, rising digital asset adoption and shifts in monetary policy add complexity. Innovations like blockchain-based gold tokens may enhance market accessibility and transparency. Environmental considerations could reshape mining practices, affecting supply dynamics. Investors must remain agile, balancing gold's traditional role with emerging investment opportunities. 9. Impact of central bank policies on gold in 2025. Central banks play a pivotal role in shaping gold's investment landscape in 2025. Many institutions have increased their gold reserves to diversify foreign exchange holdings and reduce reliance on dominant currencies like the US dollar and euro. This strategic accumulation reflects concerns about geopolitical risks, currency devaluation, and economic uncertainty. Additionally, unconventional monetary policies, including quantitative easing and near-zero or negative interest rates in some regions, have heightened gold's appeal as a non-yielding but stable asset. Central bank purchases tend to support gold prices over the long term, signaling confidence in its intrinsic value. However, potential future shifts toward tightening monetary policy or interest rate hikes may exert downward pressure. Investors closely watch central bank announcements and gold reserve trends, as these factors often influence market sentiment and gold's role as a safe haven amid fluctuating global economic conditions. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.